Thank you, Renato, for the invitation for me to be here. Always a pleasure to come to the Politécnica de São Paulo, and, where I have lots of friends here. Uh, my presentation, I intend to be short because I would like to have more time to discuss, to talk to you more about what we can go from that. So I've been researching in about banking technology for almost 30 years now. So sometimes I start thinking about that. It's quite a long time. And then the focus of my presentation, it's tell you a little bit about the evolution of the field in these last decades, but also the evolution of my research, because since I've been researching in this field for that long, so I've been going through this for, very close. So first of all, that's my personal highlights that Renato just said. So I'm from Fundação Getúlio Vargas. Fundação Getúlio Vargas, it's not a university. It's a school focused in three main areas. It's business, administration, economics, and law. So just only these three areas. So we don't have, at least so far, we don't have an intention to become a university to have more other fields. So we're very focused on these three areas. We have this institution, or you don't know about that, so it's a very prestigious institution in Brazil. In many areas have partnerships with government. For example, the inflation rate index, it's created by Fundação Getúlio Vargas. So the government knows the inflation rate in Brazil because the researchers from Fundação Getúlio Vargas developed this calculation. So this is one of the things that we do. Actually, the Fundação Getúlio Vargas, it's based in, they have two headquarters, one in Rio de Janeiro, other one in São Paulo. So actually, trying to explain that. So the power is in Rio, but the number of schools and students, everything, and most of the money is in São Paulo. So that's the way we divide the organization. But we have very national activities all over the country. So I'm as a former engineer, I from University of São Paulo too, in São Carlos, and I did my master and my PhD at Fundação Getúlio Vargas. And since then, so I have connections with Fundação Getúlio Vargas since I started my master's. 1990, it was exactly when I started doing research on banking technology at the time. Let's move forward. Just telling you a little bit about the evolution of the field. Of course, it's not surprising that the research on this field is very related to the way the technology has been incorporated into banks. In the first decades, the beginning of the 60s, when the first computers became to be implemented in banks. So the very beginning, along the 60s and mostly along the 70s, the focus was back office automation. So of course, most of the research at the time was related to that. In the 80s, things had changed a little bit, especially in Brazil. There's a story that started actually at the end of the 70s, when our government, at the time we were living in a dictatorship, but our government had decided to develop national technology related to computers at the time. And of course, this was not completely in line on what the main technology providers was thinking about that. And this somehow worked here, mostly because banks have supported this initiative from the national government to create a Brazilian industry for computers at the time. Because of this, at the end of the 70s, the beginning of the 80s, we had already developed here kind of a national computer industry, and mainly focused to serve the bank's needs, because most of the investment in technology at the time was done by the banks. And of course, the Escola Politécnica has a very important role at the time, because was one of the schools that was educating people to work in the banks at the time, to implement all this technology, new technology at the time in Brazil. So this kind of partnership between the national government, the banks, and some schools, including Escola Politécnica, was very important at the time, at the end of the 70s, to establish the national industry of computers at the time. We can discuss a lot of that, what happened after that, but this was actually what happened. And then, in terms of research, it's possible to imagine how this helped to develop the field at the time. Well, along the 80s came the micro computers, which was something new, some new technology, and of course this has great impact on banks too. And because at the time we had a kind of stable industry, technology for computers industry, and banks were using a lot of this, and you have to add this, because during the 80s we had it was an era in Brazil where we had a very high level of inflation. So then to implement computers at the time was very important for the companies, because the whole banking processes has to be become more online, which was very important in an economy where we had very high inflation. And at the time, the inflation also provide money to the banks to finance this kind of more implementation of computers in the banking system. So then it was kind of, you can tell that it was somehow, for the whole economy, was vicious, because inflation was always bad. But because of the inflation, in a situation where banks were controlling the computing industry in the country, so one thing were helping another. So then we were having more computers, more investment in computers in banking, because we have inflation, then banks would need more computers to be more online process, and at the same time inflation would bring more money to the banks to invest in this implementation of more computers. Actually, in this era, this decade in the 80s was very important to establish the level of banking technology that we have in Brazil nowadays, which is somehow, you can compare this banking technology in Brazil with the best what we have around the world, specifically in terms of online systems, which is not easy. So I had experience of banks in other countries. I remember for example, when I lived in Berkeley, which is it's very close to the Silicon Valley, and I was amazed the way. I remember, I can tell you a short story just to explain what happened. So I imagine I have a bank account in Bank of America, with big bank. It's one of the banks that is in the US that is very proud of the level of banking technology that they have. And I remember one day, at the time, was in the beginning of the internet banking. I remember one day, I went to an ATM machine, I print my balance in the ATM machine, I went home in the internet banking, I print my balance, and it was different. And I said, well, that's not possible. I have just in one very single day, I cannot have two different balances. So then, oh, that's, the guys were telling me there in Berkeley, so that's normal. So it would take on some time to all the systems to be updated and everything. I said, no, that's impossible. That's impossible. And then I remember, so that was something that in Brazil we had in the 70s. That's not normal. So I cannot have in my hands two documents about my balance taken from different channels, telling different things in the very same day. So at the time, for the Americans in the Silicon Valley, this was kind of normal. And I was trying to explain then that was completely old thing. This is, in Brazil, there's something that happened only in the 70s, never in the 80s. At the time it was in the 90s. I said, never in the 90s, this could never happen. So just to give you a short idea on how this inflation had helped the banking technology to improve, and of course, to created this research field, have to help this research field to move forward. And of course, it was at the time I did my master's. Was my first experience as a researcher in banking technology, and my master was about downsizing in banks. For you that ever heard about that, at the time, a big discussion was, so considering that banks were relying on mainframes and big computers, with the big amount of PCs and microcomputers taking more and more important role in the banking processes. So they started a discussion on how this could end. It would be possible to create a bank without mainframes. At the time, that was a discussion. We already had at the time, in the 90s, one bank in Brazil, mid-sized bank, who completely gave up the idea of mainframes, that they could do about the same thing with only mid-sized computers and microcomputers. And so this was called at the time downsizing, the process of downsizing of information systems in banks. That was the subject of my dissertation. Of course, now we know that we didn't give up completely the idea of big computers, but big computers now are a lot different from what they were at the time. Particularly not because of the size and not the capacity of processing of the computers, but the whole organization system around the computers. That's actually what changed at the time was not the computers themselves, but the organization processes around the computers. So at the time we had the CPD, the Center for Data Processing in many companies. This was actually the change. It was not actually the size of the computer, of the power of processing in the computers, but the way computers are introduced and organized, or the organization around computers inside banks. That was my master's. In the next decade, in the 90s, so we had already the beginning of the internet banking era. My dissertation at the time was about internet banking. I can tell you that I started this research in this subject in 1996, where we didn't have internet banking actually at the time. I was at the time. It was 1996. I was in Berkeley, and if you had a chance to read my dissertation, it was funny because I talked to some bank executives, and at the time they said, "No, I would never put my bank on the internet. This is not an environment for banks. This is unsafe, full of hackers. That's not clearly a technology to be adopted by banks." So about 20 years after that, it's quite different. But it was the way many banks were thinking at the time. So actually, I finished my dissertation at the end of the 90s, and at the end of the 90s, in very few years, this whole area had changed completely. Mostly because many banks in Brazil, actually was one of the leaders in this area. I can tell you that internet bank started in the world in May 1996, when 5 banks had decided to provide some services, bank services on the internet. Because what we had before were just institutional pages of banks on the internet. The first banks that started providing some real services, banking services on the internet happened all the 5 in May 1996, and there was one Brazilian bank among these 5, was Bradesco. And this shows that the way Brazil was since at the time, but until now, one of the leaders in terms of technology implementation in banks. Just to explain you what happened from May, I'll tell you clearly because I remember the number. From May 96 till December 96, in Brazil, we moved from 1 bank providing services on the internet to 20. Meaning something interesting, meaning that most banks were already preparing something, but all of them were afraid to be the first. So as long some of them decided to launch the services, the other immediately followed and implemented the services on the internet. And of course, so you can have also can imagine that provide self-service for banks through microcomputers was not something that started with the internet. So this started actually at the end of the 80s, when some banks were developing a specific software, and at the time they were giving this software to the clients. At the time they called home banking. So if you want to install your home banking system on your computer, so you go to the bank, you get at the time diskettes, and then we install the system on your computer, then you could connect to the bank. This actually never worked well. Mostly because banks at the time, they needed to have a big customer service to attend clients with problems on installing these systems. When the internet came, was a completely different thing. So everybody already knew how to use the internet. So and then bank didn't have to provide the software. But they have just to update the servers, and then the clients have their own software to connect to the bank. So this situation changed completely the idea. I can tell you at that time a little bit. I have lots of literature about that. In the beginning of the 90s, many people were already saying, people that were studying banking technology, were saying that this thing that we called home banking will never take off. This won't work out because people don't like to use this. This idea was completely demolished when the internet came. So just to give you a brief idea on how the technology, the way the technology was evolving, was changing completely the way bankings were planning themselves the adoption of this very same technology. And of course, because banks are very aggressive and adopt new technologies, so of course they have to also make some changes on these technologies to make them work for the bank environment, which is an environment that needs a lot more security and reliability than regular systems in other areas. It's funny to know that most technology, or many technologies that are very common for banks today, were never developed for banks. And when banks adopted those technologies became more reliable for the market in general. We can go, like, for example, we can start from the telegraph. But telegraph was never created for banks. But when banks adopted the telegraph, so telegraphs became more reliable. So computers were not developed for banks. When banks start adopting computers, so computers start becoming more reliable. Internet, the same. Now, mobile phones, the same. Were technologies that were not created to be used by banks or are connected to banking systems. But when banks adopt those technologies become more reliable and become more useful for including other areas outside bank. But this was until 2000. What I want to spend a little bit more time talking to you what's what happened from the year 2000 and now, which is something that I called, which is a main, I think, task for banks to develop is to create more financial inclusion. Let me show you. Oops, sorry. Let's take a look on this map. So, you see here that, oh, I have the pointer. Okay. We see here the percentage of adult population who do not use formal or semi-formal services, meaning that the gray are the countries where we have less adults without access to formal or semi-formal financial services. Let me just talk to you a little bit about what is formal or semi-formal. Better, I will tell you what's informal, but to help you to understand better what is this. So, there are at least 4 banking services that every adult person has to use sometime in their life. One is payment. So, in payment, it's not one time in life. Payment, you use it many times a day. But credit, or savings, and insurance. These 4 kinds of services, every adult uses sometime in life. Meaning that it doesn't matter the level of income of the person. It doesn't matter if it's a rich person or it's a poor person or very, very, very poor person. Everybody needs to use these 4 kinds of services, financial services, somehow. What most people that don't have access to formal services or semi-formal services, formal are more related to traditional banks. Semi-formal are related to other financial providers that are not banks, like cooperatives, for example, or microfinancing institutions that they also provide semi-formal financial services, meaning that they are recognized as companies that provide services, and the central banks have some degree of control on this kind of institutions. Of course, central banks have strong control on banks and very light control on those other kinds of institutions, what are considered for the central banks as non-bank financial institutions. When you have when a country like, let's see, some countries here, like in Africa, very poor countries, when they don't have much access, this is dark means, not much access to formal or semi-formal financial service. This means that those guys survive mostly relying on informal services. What is informal service? Whatever. So, for example, what means savings for informal? So, meaning that put money on the mattress, for example, or in many cases there are some papers written about that. So, when you have cases like one person in the family, usually mother of old aunt, that are very reliable. If I get some money, I give to my aunt or my mom, because if the money stays with me, I will spend. So to save, I will put money with my aunt. Or what is very common also in many countries, and of course in some areas in Brazil, goats. Goats. So if I put my money on goats, so I will save some money. And goats are very, I've heard that. It's not, I'm not creating this story. I've heard that and on the research on the field. So I rely on much people. One guy told me I rely a lot more on goats than in banks, because if I buy some goats, I go to my backyard and can see my goats there. If I go to the bank, so I never see my money, and every time that I ask for my balance, my money is lower. So I don't know what happened, but my money always disappear in the bank. And my goats, I can't have control on them. And also, goats can create more goats. Goats can give me milk. So goats are more reliable. And and also goats can work as an insurance. If I need money for some reason in a specific occasion, I can sell some goats and get some money to buy other things. So, but getting back to this map, it's clear where you see that countries where you have more access, let's say, to formal and semi-formal financial services, you have more economic development. There's a very strict relation between economic development and access to banks and for the general population. Meaning at least one thing. So we will never create a developed country without giving more access, extending the access to financial systems to most of the population. This is one thing. The second thing that we have to think about that, what thing comes first? Economic development leads to access to banks, or access to banks lead to economic development? I can tell you that this was a big discussion among economists for many decades. But along the years 2000, it's become a lot more clear that we can intervene with policies and strategies, and especially with technology, to improve access. And when we improve access, so we can lead country to the development. I can tell you a lot about that. I have some field research on that. I have some movies when I was traveling around Brazil, interviewing people about that. So it's clear what happened in Brazil along starting from the year 2000 to 2010, 2012. This was clear that at least very important part of the development that we had was related to the strategies that banks had in Brazil to expand the access to banks. And so usually what happened is that why those countries have no access, or why is it so difficult? So also take a look here. So we have nowadays about 7.5 billion of people on the planet, around 5 billion adults. Consider that, if you are talking about bank access, we have to consider only adults, or at least people over 15 years old. 53% of the adult population in the world don't have access to formal or semi-formal financial services. Meaning that this is the biggest problem that we have. So imagine in a market when we have big companies operating, serving only half of the market. This is crazy. Why they don't, they are not interested on the other half of the market. We're not saying that it's a small part, it's half of the market. So banks are serving only half of the market in the world. So why they don't serve more? So they are always saying, it's those guys in those countries live very far from this more developed areas. So banks, it's very expensive for banks to be close to this population. There's increased transaction costs for banks to implement services in these areas. Also, this is also related to products and channels, especially channels, if you think regular branches and products, the way bank products are being designed don't fit very well to the needs to this population. And of course, these guys who never had access to banks, they don't have credit history. Because they don't have credit history, banks don't know them. If banks don't know them, banks are not interested in them. This is completely different if you consider about technology. Long distance. So have you been in a bank branch lately? So everybody is using internet, mobile phones, so we don't need to, whatever place that you are, that's not a problem anymore. So transaction costs, it's exactly because of to reduce transaction costs that bank has adopted technology at such a large scale. Products and channels, of course, I can tell you a lot about that because this is something that I've been studying a lot. But there's a lot of alternatives to develop new channels, including the mobile phone. And credit history. Oh, you don't need to be a bank client to have a credit history. Usually, this half of the market, they don't use banks, but they buy a lot of other things. Specifically, they buy cell phones. They have a cell phone account. It's possible to understand credit history not from banking use only, credit history only, but the way those people that have cell phones, for example, behave. And it's a positive behavior because you analyze the way they pay the bills. So it's a positive. It's not a negative. Negative information is when you don't pay something. So then you have a negative information in the system. Your positive information in a credit history system is when you pay. If you pay, it means that you're a good payer. So then you can analyze information about this population that don't have bank access. You can understand their credit behavior based on information that they have coming from other kind of uses that they like, for example, buying in the stores close to their houses, for example. If you know that, so you don't need to have a credit history inside the bank. So now there's lots of strategies, especially we're talking about big data. Using big data, you can understand this. So this is not a problem anymore. And the solution of all of this is related to technology. Well, there's opportunities to investigate that. This is what I told you so far. Shows you a little bit an important thing also. Because imagine that, so just get back to the map again. Imagine that the solutions for this half of the market that don't have bank access won't come from the countries that already have bank access to most of the population. So the innovativeness, the new things that are being created, the new uses of technology to improve bank access, this is what I'm telling you here, will come exactly from the countries that are adopting these new strategies, which are not those countries. Meaning that we that live in Brazil have a big and strong opportunity to develop strong research and very research with potential of big impact. So because we are kind of mid, we are not in the bad, the worst position here. So we're kind of closer to the mid position here. So solutions that we can develop here, especially because we also combine this situation that we have here with a kind of high level in terms of adoption of technology in banks here. So then we in Brazil are in a good position to research and to contribute to develop new solutions to this world problem. Okay? What we have here? So, branchless banking. I've been investigating this situation for many years, so since 2006. So when I started researching branchless banking, you see, this is a river in the middle of the Amazon. This is a branch bank floating in the river. So this is kind of extreme example, but we have in Brazil about, I can tell you the rough numbers, like 10 to 15 million people that are using bank services daily without never being into a branch bank. 10 to 15 million people who never been to a branch bank, so they don't know what's a branch bank, and they use bank services every day in their life. They have bank accounts, they have cards, they pay in their cash money, they make transfers, they do whatever through these branchless banking technologies. Mobile, I already told you that. We have lots of things here. So mobile has been a promise in terms of banking as a banking channel for many years. And we have lots of problems to solve yet. We have some kind of emblematic examples, like what happened in Kenya. You probably have heard of M-Pesa, which is one amazing case where around 70% of the population of Kenya use mobile bank, or use the mobile as their banks. But why this case cannot be replicated to other countries? So since this case is already 10 years old, so what happened? So you need to understand that. So there's a lot of opportunities for us to investigate more about that and to understand why this thing happened there in some countries in Africa, and also can say in some other countries in Asia, but it's not the same in Latin America, for example. Fintech, you probably have heard of that. This is a new wave of banking technology. So this is the definition of fintech. It's kind of difficult. But usually fintechs are known as non-bank institution, mostly startups led by young entrepreneurs, and they are very focused on specific services. They are not they don't have a kind of strategy that banks have to. Banks are more like a supermarket of services. They have lots of different services. They offer lots of different services. Most of the fintechs offer just one or two services, either credit, either insurance, either other kind of different services. But they are very focused, not always on those 53% that I told you on the map, but even on the half of the population that banks serve, most of them are badly served by banks. They have complaints, especially small entrepreneurs, for example. They are badly treated by banks. So those guys, fintechs, are very interested in offer better services specifically for those markets. Those guys are growing a lot. So there's a strong discussion about if these guys are going to replace banks or will combine with banks. In some cases, banks are funding those guys, meaning that banks are, in many cases, transfer to fintechs the ability to innovate. So banks are, because innovate is always risky, so you have to put a lot of money in a kind of new thing that you never know if it will work at the end. So then banks will stay more conservative doing the things that they already do, but they combine with fintechs to allow them to develop those new things. So, but this is also something that it's less than 5 years old, this kind of movement. It's worldwide. In many countries around the world, you see fintechs booming up. And cryptocurrencies. This is a lot of things going on in this area. So Bitcoin, it's only the more well-known of those guys. I can tell you that nowadays we have something like 700 different cryptocurrencies going on and working somewhere for some kind of community and so on. So this is something very important. I can tell you that I stayed my last 6 months. I stayed in Rotterdam from August to February, and most of the time I was there, I was studying cryptocurrencies. So this is a very new and interesting field. And of course, many other things, not necessarily related to financial inclusion, but it is also things that are very important, like algorithmic trading. So it's impressive to know that nowadays we have in big stock market, like in US, something like 40 to 50% of all shares that are being traded are not traded by humans, are being traded by machines. So what's the impact that we could have for us in the future? So that's it. So just to give you a brief about what I'm doing, what I think about this banking technology field. So thank you.